Thank you. Our next witness is Mr. Rob Chapman, President of the American Land Title Association. Welcome.
Chairman Capito, ranking members Meeks, and members of the subcommittee, good afternoon. My name is Rob Chapman, and I am the President of the American Land Title Association and Executive Vice President and Chief Information Officer for Old Republic National Title Insurance Company. I joined the company 18 years ago. There's no doubt that the Dodd-Frank Act has increased the complexity of regulatory compliance. As we implement all these rules and regulation, it has become clear that Congress needs to work in a bipartisan way to improve the regulatory process. The end result will be better compliance by business and stronger protections for consumers. We agree with the Bipartisan Policy Center's report last year that when the Bureau operates in a transparent, open, and iterative manner, the results are generally positive. However, when the Bureau makes unilateral decisions, rolls out initiatives, rules are processed in a more closed deliberation, the results are far more likely to be problematic. Our industry experienced this with CFPB Bulletin 2012-03. It restated longstanding federal guidance that banks and non-banks must oversee their vendors. But unlike other regulators, the Bureau offered no additional direction to help banks and non-banks effectively oversee the action of their vendors and left many open, unanswered questions about how to demonstrate compliance. How this bulletin applies to our industry is also unclear because unlike a traditional bank vendor, consumers primarily choose their real estate settlement providers. To help our members fill this void, ALTA created a best practice frameworks for title and settlement companies. These are reasonable, prudent business practices. However, lots of uncertainty, varying practices, and vetting procedures are predominant in lender-vendor management. We fear that some lenders will limit the number of vendors with whom they are willing to work, which will limit competition and hurt consumer choice. A better outcome would have been a process where CFPB consulted to reduce these unintended consequences. An example of a more transparent process that worked well is the Bureau's rulemaking for integrated mortgage disclosure under Section 1032 of the Dodd-Frank Act. This includes a 9-round iterative process and a one-time small business review panel to ensure that the regulation was not overly burdensome on small business. My written statement outlines 6 common-sense ways the Bureau can make small business review panels more effective. Other Bureau rulemakings did not use the small business review process, but probably would have been better off if they did, including the qualified mortgage rule. These panels encourage collaboration to produce better outcome for consumers and business. Another good example of how a transparent and open process results in better outcomes for business and consumers is the Bureau's recent released study entitled Mortgage Closings Today, a preliminary look at the role of technology in improving the closing process for consumers. Released last month, this highly credible research identifies 4 key pain points for consumers and industry and was a result of ample input, including interviews, an opportunity for public comment, and demonstrations with technology vendors. Open and transparent process like this one led to a good outcome for consumers and our members. Based on these experiences, ALTA recommends Congress work in a bipartisan way to improve outcome for consumers and businesses in 3 ways. First, Congress should pass H.R. 4383. This bipartisan legislation by Representative Pittenger and Representative Heck would establish a small business advisory board at CFPB similar to those already established for community banks and credit unions. They provide clear, formal, and open channels of communication between the Bureau and the industry. Second, direct the CFPB to issue advisory opinions. An advisory opinion provides greater certainty to those of us who comply with federal consumer financial law in the real-life situations. Consumers will see better outcomes if the Bureau spends more time advising people in the industry how to best follow the law. Finally, encourage public feedback on draft policy statements, bulletins, and other guidance documents. Public comments ensure the final documents are useful and understandable to the industry, provide a safety valve to reduce unintended consequences, and produce better policy outcomes for consumers and industry. Thank you for inviting me to testify. I'm happy to answer any questions that will be coming.
The gentleman from North Carolina, Mr. Pittenger.
Small business, you've seen a lot of transitions, I'm sure, in the role of the federal government. Do you believe that the voice of small business is sufficiently represented at this present time on the Bureau?
I do not.
What would you recommend could be done more to ensure that small business does have a voice?
In the industry that I represent, the majority of those members of our association are small business people. And they need to have a voice in which they can communicate their concerns with the Bureau and be able to articulate the real-world activities that are brought down.
What actions taken by the Bureau, Mr. Chapman, have impacted your business?
The first CFPB 2012-03 came out. We didn't know directly how it affected our business. So we're out here trying to slay dragons with no idea of what we're trying to thwart off. So from the title insurance settlement world, we're not directly regulated by the CFPB, but those that we serve, the lender community, have a great deal of regulatory environment that we need to be adherent to. So it was very, very hard for us to try to understand how we would keep our members relevant and continue to have them be applicables with the new regulations.
So do you feel, Mr. Chapman, that you and other members of ALTA are sufficiently represented then on the Bureau before they took these kind of actions?
I think we have a great relationship with the Bureau, but I think there could be better representation if we set a small business panel.
Thank you.
But anyone else, do you think 15 days? Let's just go down, Mr. Chapman, Ms. Pierce, and then Mr. Pincus. Would you just, 15 days to come back with a rule on abusive practices? It's a term that's used by the Fed all the time, but is 15 days enough time? It doesn't appear to. I would be objecting if I were a member of industry. I'm just curious your response, Mr. Chapman.
I'm specific to that. I'm sorry I can't give you a factual comment, but I can say I think that the CFPB is doing a wonderful job. It just needs to look at some different transparency and different communications to those that it regulates. So,
Mr. Chapman?
majoritively, it looks like the bill should be supported. I think that the jury's out at this juncture, and we'll still need some more time to answer that question specifically.
Okay.